go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Let's look at Asia. All of the markets are trading in the red.
We struck at the heart of Iran's nuclear enrichment program.
Support here stands at 24,847.
Really, this is the first time we've ever seen an attack on Iran directly.
Could the Strait of Hormuz become the next geopolitical flashpoint? So 24,570 or so on the Nifty, so about 1.25% lower.
The 787 Dreamliner has never been involved in a crash.
Getting into his climb phase, he needed engine thrust and the engines let him down.
Historically, people have associated high oil prices as being negative for India because India imports 80-90% of its crude oil.
Indian markets are down 200 points. The Nifty sensex lower by 700 points.
If Iran retaliates, we will be free to retaliate again. So
The mid-cap end of the market too not doing too well.
Well, that was the day so far. You're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay and Nigel D'Souza. Looks like we're going to close out the week in the red, but definitely off from the early morning lows. The morning tick was, I think, below 24,500. As we speak, 1 hour to go, but it's 24,700 plus.
Well, for the markets, it won't go down as a bad trading session because the breadth of the market has improved from around 150 stocks that were advancing to 750 stocks that were advancing. There are select stocks that are still seeing buy on dips, so that is heartening to see as well. And actually, the Indian markets are doing relatively better than what we saw for the rest of the globe. And keep in mind, Brent crude prices are still up by close to 7.5%. But the positive is it's cooled off from around that $77 per barrel handle that we saw earlier today. So yes, it's a weakish trading session, but not as bad as feared, say at the start. Hi, Surbhi.
Hi, good afternoon, guys. Usually I'm very perky on a Friday, but this is a different Friday because apart from the markets, we're still dealing with the devastating news that we got. I mean, it's just been 24 hours. So yeah, not been the easiest week for reasons beyond the street. But I completely take your point that from a market perspective, it could have been worse because the headlines that we woke up with, crude oil moving 15% in a span of 48 hours. I mean, it could have been a lot worse for global equities, but we've stabilized. And I'm just looking at US futures. For what it's worth, US futures are down between 1-1.5%. And I think we're in very tentative territory. No one knows exactly what could be the way, shape, and form of retaliation. Is it just done with 100 drones? Will there be more? So we're in extremely uncertain times. And I think given the news flow, markets will say, thank God it's Friday.
Well, that's right, Surbhi, but you said it, right? Markets are secondary. First is the human aspect. And what we have heard about in the last 24 hours is extremely heartbreaking. So strength and prayers to all our brothers and sisters out there in Gujarat. But for the time being, we've got a market to track. So let's continue with that. And we've got 60 minutes of trade to go. Mitesh Thakkar is back with us. Hi, Mitesh. Good afternoon. 170 points down, but we were down more than 300 points early morning. The Nifty Bank as well has seen some recovery. Now, on the Nifty Bank, from around that 57,000 handle, we have corrected to around 55,500. Where are both these two indices headed?
Yeah. Good afternoon. So I think, on Friday, as we started to decline below 25,000, the breakout which happened from the 24,500, 25,050 range was negated. And, that kind of also filled the gap up which had happened on Monday. And that kind of suggested that we are back to the range. Now, we've successfully held the lower end of the range, which is around 24,500. Of course, intraday was about 20-25 points lower, but then that will not make much of a difference. So we're back to the range. Now, I think, the only worry is that we should not start getting below 24,500, 480 zones. If that happens, then I think, good chance that we might look at a test of around 24,000 as well. The structure is slightly weakened, but as long as that level is holding 24,500, I think you'll keep getting bounce backs. And on the upside, 24,800, 850 is the key area. So, traders who are looking to now get into some kind of short position should look at 24,750, 800 zone as the shorting area with a stop just about 24,850.
What about stocks, Mitesh?
So I have, two SBI names on the buying and selling list. SBI Card is a buy with a stop at about 985 for targets of 140, while SBI Life is on the negative side. Keep a stop just above levels of 1780, look for targets around 1710.
Mitesh, I wanted to ask you about another stock, PI Industries. I was looking at an Aquarius note, and they are highlighting the export data, both for April as well as May. And if you look at it cumulative as well, the growth is to the tune of close to 20%. And Aquarius highlights that the EBITDA growth could be to the tune of 30%. What's your view on PI Industries? In line with the market, the stock started off weak, but as we speak, it's at the high point of the day.
So this PI Industries, right?
Yes, PI Industries.
Ranjan, I think, the stock actually has gone through a very jack kind of an up move in the last few weeks, but that up move still remains. And if you look at the weekly charts, I think there was an important level around this 3900 mark, which the stock has successfully cleared. The 200 average is at about 3845. That's also been cleared. So I think good chance that we should see continuation on the upside. The first target is around 4100, which was the high, the swing high, which the stock made in December. And in case we keep going beyond that, there's a good chance that we might actually see 4300. Beyond that, I'm not very sure, but these are the two targets I have in mind.
Okay, all right. Stock at the high point of the day, but in the last 6 months has actually been a relative underperformer. It's not moved anywhere. Even in the last 1 year, it's not even given a 10% return. But this data point that's come in with regard to their exports is quite encouraging. So we'll keep an eye out on that stock. Well, let's move on then. Sources tell CNBC-TV18 that Indigo promoter may pare some stake. Sudarshan's on top of that. He's here with all of those details. Sir?
So another block deal is likely to take place in Indigo very soon, and this time it's not Rakesh Gangwal but another promoter, that is Interglobe Enterprises. I would say Rahul Bhatia. Sources say that Rahul Bhatia may sell another 4% stake to raise up to $1 billion, or say more than rupees 8,600 crore. Remember, it would be the second time in a year that he would be selling the stake. The same time in 2024, he had sold 2% stake to raise around rupees 3,370 crore, and that deal was done at rupees 4,362 per share. And since then, stock price of Indigo has surged more than 20%, and today it's trading at more than rupees 5,200 per share. Now, once this block deal happens, Interglobe Enterprises holding will come down by 4%. Currently, it's holding at 35.7%. After the block deal, it will be around 32%. Now, apart from Interglobe Enterprises, Rakesh Gangwal, if you remember in 2022, had announced that he would be paring the stake in the company on a gradual basis. And in the last 3 years, he has sold stake worth rupees 40,000 crore. And now, his stake has reduced below 8%, that is 7.8%. Regarding Rahul Bhatia's stake sale, we have reached out to the company, but company has declined to comment on the same.
Okay, all right, Sudarshan, thanks very much. That's a very interesting development, actually, given that till now, it was only Rakesh Gangwal who had been periodically selling their shares, and it was stated intent, and that had been happening over the years. This is the first time that we're seeing the other entity, the big promoter entity from the Bhatia side, that is reducing stakes. So let's see. Interglobe in of course, focus as our aviation stocks pretty much around the world after the extremely devastating events that transpired yesterday. Let's discuss this and more on the markets with Prakash Diwan, who's joining us on the show this afternoon. Prakash, thanks for joining in. So Interglobe Aviation, aviation overall, not the best of times to be discussing it, but anyway, let's talk about the block and the fact that the other promoter faction is also selling. What would you read into this?
Good afternoon, Subhi. So, a couple of things that come to my mind when you see the way the cap table is getting restructured. The Bhatia family probably has been talking about, and Interglobe Enterprises, the entity that is in question right now or in discussion right now, has been talking about expanding into a lot of other things in terms of tie-ups with hotels and, setting up other ancillary services, which are not part of the listed stock, right? So I'm sure they'll need to capitalize themselves far better. They'll have to strengthen their own balance sheet to be able to do all of those. So that 35% getting paid to 32% really doesn't change their interest in the airline, but it helps them do a lot of the diversification that they're talking about. And remember, any airline, once it reaches a level of peak efficiency in terms of either number of flights, number of footfall, number of passenger load, amount of passenger load and all, will probably have to kind of consolidate and stabilize because it's extremely difficult to keep yourself in that level for too long. And given geopolitical issues, and I would be surprised if after this event yesterday in Ahmedabad, there's going to be a shortage of aircrafts, which will be more acute than what we've seen. Boeing getting out of the reckoning in multiple ways means that the load is going to be carried only forward by Airbus, and we really don't see anything changing in terms of the supply dynamics there. So it's going to be a difficult area to expand, especially international circuits and sectors. And probably, that's the thought that it's time to kind of put money into some other businesses from the promoter entities. Nothing wrong.
But I completely take your point, and that's why the question, from a shareholder's perspective, Interglobe has had a dream run, right?
Yes.
The stock has exactly doubled in the last 2 years. Same time, middle of June of 23, this used to be a 2,500 rupee stock. Today, it's over 5,000. Given everything that you described, and there is promoter selling, would you be worried that this signals some sort of a top? Or is this a dip to buy?
No. So you're right. So this could definitely give you a bit of a pause on the trajectory, on the growth that the stock has shown. You'll probably lose, let's say, some ground, get back into that 4,500 to 5,000 zones. And that's where you could probably start reassessing what plans are for the airline. Remember, yesterday's event is going to have far-reaching ramifications, and especially in terms of strategies that airlines, it could be insurance premium that will go up. It could be so many other complexities that will come around. So it's best to reassess that. And if the stock is available at lower levels, as I said, between this 45 to 5,000 kind of band, it probably won't make more sense. At this point, there's no buying recommended.
Okay, one sector which is defying the weak market is defense today. Idea Ford, 7% up. Zentech, 3.5%. Garden Reach Shipbuilders, that's gained close to about 2.5%. Paras Defense, BEL, Cochin Shipyard, Bharat Dynamics, all these stocks are up anywhere between 1 to 3%. The big one today is Idea Forge. And Idea Forge has been moving well over the last couple of weeks. Prakash, we've spoken a lot about, defense stocks. Wanted to get your thoughts on some of these shipping-related stocks. So Shipping Corporation of India or a GE Shipping, they're also surging. They're emerging as some of the top gainers in Nifty 100. And here again, it's that, global trade disruption, tanker rates are likely to go up if they haven't already. So that's the narrative which is fueling the rally here. Fundamentally, SCI, GE Shipping?
No, makes a lot of sense, and then you kind of attributed it to the right factors. Like GE Shipping gets 50% plus revenue from contribution from its tankers business, and if those rates were to go up, and remember, if Iran is under attack in any which way, however long this lasts, there's always this fear of the Strait of Hormuz getting out of reach, out of bounds. And if that were to happen, things will be very different. So you'll also have to balance this with what's happening on the tariff side, which will redefine how goods move between so many markets and geographies. So there's lots that are happening, and none of these shipping businesses have actually got re-rated. When the market moved in March, April to come to the current levels, there's a lot that's moved up, not these companies. So from that perspective, it makes sense. But it could not be a very long-lasting trend, and that's why you have to see it as a tactical move rather than something which is a major shift in fundamentals for a secular long-term trajectory.
But tactical aside, structurally, do you like it over the longer term, any of these stocks?
No, so GE Shipping has been an all-time favorite. There is absolutely nothing wrong in terms of its balance sheet, its business model, the way they've kind of been able to manage the aging of the fleet. So it's a great business, but whether to buy it today because of this news flow, that's what I was trying to explain. Long term, you can definitely buy it, and shipping will always remain a very critical element in the way our export orientation is dramatically going to change in the next 5-10 years. So very positive on that, but just stress on the point that today is not just the day to buy because you're expecting these tanker rates to kind of get revised upwards.
All right, Prakash, I wanted your view on Saman Capital. That's the erstwhile India Bulls housing finance. Now, we have some flash at the bottom of your screen. They've said that they're inviting buyback of bonds that were maturing in September 2025. They go on to say that they're seeing strong domestic debt capital flows post the RBI policy action. And post, that release that's come on the exchanges, the stock has seen a bit of a recovery from the day's low. Any view on this name? It's the erstwhile India Bulls Housing Finance. Your take, Prakash? I think we've discussed this in the past.
Absolutely, Nigel. I think it's a great turnaround case study. Even the real estate arm is undergoing so much of dramatic changes and far-reaching changes. But here it's a question of smart company trying to kind of leverage on the changing situation. Remember, these bonds would be at much higher coupons. Because they've been issued in the past where things were the interest rate was slightly stronger. Now they can reissue bonds or raise capital at much lower cost, probably a better maturity profile as well for much more longer tenures. And remember, the balance sheet improvement in the last couple of years, or at least the last 18 months, is also going to help them get better rating, right? So they'll have a superior rating, lower interest costs, better maturity. So all that kind of packaged in definitely makes sense. Whether as a stock you want to look at it, it'll probably outperform some of the housing finance businesses, but it will probably still take one more year, given what changes they've been talking about in the calls and in the analyst interaction. I think it'll probably become one of the top tier HFCs, but it might take a year for the entire portfolio to kind of get that sheen and some of the repair to be completed. But we've been able to see that happen. It's not done anything dramatic as yet. It's probably ripening up for that big move. So from a equity perspective, it makes sense to invest. The debt market reset on the capital structure or these bonds definitely helps them bring down costs and become more efficient.
Okay. All right. Got that. Just stay on. We have more questions for you, Prakash, in a second. Let's put the spotlight on the Jubilant group of companies, because there were several block trades across the group companies today where promoter entities were, believed to be among the sellers. Let's go across to Nimesh for more details. Nimesh, what's the buzz you're picking up?
Hi, sir. So no buzz now. It's a confirmation that in all the three group companies, the promoter entity was a seller. The book was launched last evening. The surprise of all the three stocks is Jubilant Ingrevia today. That's up 12% after the block deal. And why the stock is reacting is because the book was launched at a 10% discount to yesterday's closing price. But surprisingly, the block got done in the pre-open block window today. So just a 1% discount and the block got done. So the promoter sold in Jubilant Ingrevia 98.6 lakh shares at an average price of 676 rupees per share. So there they've raised close to 650 odd crore rupees. But because it was done in a block window, it's only designed for institutional investors. My sense is most of the domestic mutual funds did participate in the block deal on the buy side. So the disclosures could be quite interesting there. But I believe there was a strong demand, and hence we're seeing a very sharp reaction to Jubilant Ingrevia in today's market. The second stock is Jubilant Foodworks. There was an anticipation that maybe the block will happen in the block window, and it's exactly that way it happened. So in Jubilant Foodworks, the promoter sold a little over 1 crore shares, and there they've raised close to 700 crores. So again, strong demand is what I understand in Jubilant Foodworks, but I don't have a color on the real book on who all participate on the buy side. The third name is Jubilant Pharmova. That's the only name which is under pressure today, and that's because the block happened outside the block window and there was a dip discount as well. My sense is there was a large slippage as well because the block happened at the lower end. In Jubilant Pharmova, though, my sense is at least one large AIF was an anchor investor and they bought a large chunk in today's block deal. But that stock is under pressure because the block happened outside the window. Net across all the three group companies, the promoters have raised close to 2150 crores. So that's the amount that they've raised by selling stake across all the group companies. And this money, essentially, I understand, will be used for the bottling plant that the Jubilant Group is looking to invest into. So large part, I guess, will be used for that. But the biggest mover today is Jubilant Ingrevia, largely because the deal happened in the block window and there was a very strong demand from domestic mutual funds.
Okay, all right. Interesting stuff. Thanks very much for that, Nimesh. We'll come back to you in just a bit for the rest of the chatter as well. Prakash, I don't know if you've looked at any of the group companies, but interesting developments, promoters pairing stake, markets lapping it up. Your thoughts?
Yes. So, when we started the day, there was anticipation that they'll be under pressure, especially, the way Jubilant Ingrevia has responded. very clearly, the whole explanation is around the float. You have a business which is doing fairly well in terms of having consolidated after all the ups and downs. It is almost, I think, after 2021 that they last in Jan of this year they touched that high of 880, 885, and from there it's available at such a low price. I mean, such a significant discount, which the business hasn't had any adversities impacted or any kind of weakness that will be very remarkably, distinctly worrisome. So I think the institutional investors like these kind of businesses which have completely repaired and consolidated and would continue to grow. So that's exactly where the appetite is explained. And you don't get to buy these stocks so easily, on a normal day unless there's some block that's available. And what better way to buy it when there's a slightly largish block. So I think it's more to do with that. Any other companies you want to look at, I think Foodworks will probably continue to compound at a very steady state. But Ingredient, actually, in my understanding, also is the outlier. And we've seen some of the other businesses like Ami and all, which in that space, which have modeled themselves to go into a better product mix. I'm sure Ingredient can do a lot of all that. So there is potential, but it will test your patience. It's nothing which is going to happen in the short term.
Okay, all right, got that point. Thanks for that, Prakash. Very quickly, just a quick check back on the market. We've got a 200-point cut still going on the Nifty. Mid-caps have recovered. They've done really not too bad on a day like today. But you also have to caveat this with the fact that the mid-cap market had falling, or the correction had started slightly earlier. This week, the mid-cap index has fallen a little more than the Nifty. So today seems to be a relatively better off day. In terms of gainers, while of course Rima spoke about some of the defense names, the others that are managing to buck the trend would be a Hitachi Energy, 361 Wealth Management. These are stocks that are holding up. There's Narayana Health, which is also up and about. So these are some of the names on the upside. Very quickly, Prakash, before we let you go, I mean, defense is a theme. It just refuses to go away, right, for one reason or the other.
Yes.
Anything where you would take fresh exposure now, defense stocks?
So I think, from the bigger names, I would still stick to L&T and play primarily because of the kind of defense, unfolding of defense prowess that they have. On the smaller names, I keep referring to this name, so I'll repeat this again, and that's DCX. It had numbers which are not very impressive. The street is a bit confused about what to anticipate in terms of margin improvement and revenue. But given the sensitivity of the business underlying business that they have, I think they've shared enough and given enough indication that in the next couple of years, you'll probably see a very different business model appearing. The company's done fairly well, balance sheet strong. The stock has receded a bit post the disappointment. But I think at these levels also, it makes a lot of sense if you have a 2-year plus kind of horizon.
Okay, DCX Systems. I remember the numbers. For FY25, revenues were down 24%, while the company had guided for a 35 to 40% kind of growth. And since then, you saw the stock come off a tad bit. Year to date, down close to about 15%. Thank you very much, Prakash, for joining in. Get into a break. Before that, let's tell you how you can unlock a new dimension of business intelligence with CNBC TV18 Access, our premium members-only experience on CNBC-TV18.com. From market-moving insights, thought leadership to exclusive access to marquee events, journalist interaction, studio tours, high-impact learning sessions. This is truly an elevated experience, with members also enjoying curated lifestyle privileges and perks, the power of insight, the privilege of access, exclusivity, experiences, and influence. Yours to claim. Become a member. Log on to cnbctv18.com/access/plans.
Welcome back. Well, let's take a break from markets to the much, much bigger human story and the tragedy that's been playing out over the last 24 hours. Yes, we're talking about that extremely unfortunate plane crash. And our colleague Madhiya is now joining us live from Ahmedabad. I think she's visited the crash site. She's been speaking to a lot of officials as well, right from the morning. Madhiya, over to you.
We are not allowed to go very close to the crash site, but we are just few meters away from where the Air India flight AI-171 crashed on the hostel building of a medical college. What you see behind me are the 4 buildings. The 3 buildings are where the students lived, and the 4th building that saw the maximum impact, where the engine of the plane fell, is the 4th building, and that is where more casualties from the building, from the hostel, is also seen. The plane took off at around 1:40 p.m. on Thursday. The pilot made a mayday call just once, not even thrice, is what the ATC sources told us. Even before the ATC could get back to the pilot, the communication was lost. And next, what people saw is a huge explosion and smoke coming out of this building block that you see behind me. There were 242 passengers on the plane, of which 241 have unfortunately succumbed. They have died in this tragedy. There is just one survivor who miraculously escaped by jumping off the emergency door, which was next to his seat. The Prime Minister was here in the morning. The Prime Minister visited the crash site along with Aviation Minister Ram Mohan Naidu. He later on went to the hospital to visit this lone survivor. He also spoke to the relatives of the victims. The plane, remember, was carrying 125,000 liters of fuel. It was preparing for a journey to London, and when it crashed just seconds after the takeoff, the tank was full, and that ignited the explosion. And what we are being told by the eyewitnesses here is that the hostel building also had gas cylinders, which also exploded due to the fire, and that led to more casualties. The official number of casualties inside the hostel building is just 5. But from what we are being hearing from witnesses, eyewitnesses, from people who are allowed to visit the crash site and who are out and who we have spoken to, they tell us that the casualty number, the death toll from inside the building could actually be very high, because there were several students that were having lunch there. And the 4th building that we showed you, you can see the impact of the explosion. It is unimaginable. The buildings are covered in black smoke. The trees are charred. Eyewitnesses told us that the fire had spread around 300 meters. So vehicles, people standing below in the vicinity, and there were vehicles and there were animals, there were bikes. Everything was just charred due to the impact of the fire. And that is the cause, the impact of the explosion that is being seen. We are yet to hear what the official number is from what the casualties could be from this hospital.
Yeah, Madhiya, just quick 30 seconds. The team from Boeing and NTSB, the US agency, the probe agency as well, I mean, they were supposed to arrive, I think, today itself. I mean, have you heard anything from DGCA in terms of when does this probe start? Not that it can be even a patch on the wounds of the people who've suffered, but any further information on that?
What we know is that there are investigating teams who are inside, inspecting the site, collecting evidence. There is no official word on the black box as well, but what sources told us is the black box, in fact, has been recovered, which has the flight data recorder and the cockpit voice recorder, which will tell us what are the reasons that could have led to this crash. There are several fire rescue vehicles and NDRF teams that are still going in and out, because we are being told that there are still bodies trapped inside the hospital, the college campus building, and which is why there are these teams who are going inside to rescue these bodies, pull out the bodies and collect more evidence. But there is no official word on what the investigation, what is the status with the investigation. So we are still waiting for official word on that.
Absolutely. Obviously, I mean, the immediate relief or recovery operations of whatever remains. I think that obviously takes priority, and then the investigation will take its own course. Thank you very much for the latest update there from the ground. So one of the biggest tragedies that India has seen in recent memory, and our thoughts and prayers to all those who have suffered. Well, with that, we're getting back to market coverage then, and let's welcome in our next guest. Sanjay Parekh, founder and CIO at Soham Asset Managers, joins in. Sanjay, good to have you on. Actually, I'm going to open with aviation for the awful news that we've been discussing. And we were just discussing this with another guest as well. When it comes to aviation stocks listed here in India, anyway, we have only two plays. I mean, do you see this as becoming a bit of a top? I mean, till now, for instance, Indigo has had a phenomenal run, phenomenal wealth creation. But given the events of the last 24 hours and the chain reaction that it will set in motion in terms of plane deliveries, perhaps new checks, perhaps insurance costs, etc., do you see that having any impact in terms of how investors need to approach these stocks?
I mean, it's a very, very sad event, and our prayers and condolences is really feeling bad. So, on the question, I think more objectively, I mean, we all are faced with emotions, which is very painful, right? So I understand. But once, in terms of the business outlook for particularly...
Sanjay, sorry. I think we have you on a slightly odd line. It's a bit scratchy. We'll do one thing. We'll reconnect that line and then go back to Sanjay in just a second. In the meantime, let's just glance quickly back at the market to see how things are shaping up. Bank Nifty is still down 1%, and that's been sort of one of the weaker points as far as the large cap screen is concerned. Names like SBI, for instance, still down about 2% Other than that as well, even HDFC Bank, for instance, Kotak, HDFC Bank, a lot of these names are down. Actually, on the Nifty, despite this marginal recovery, you only have 3 stocks that are giving you at least a 1% plus kind of gain. One of them is obviously ONGC. The other would be BEL and Tech Mahindra. Aside of that, it's not a market that people have really ventured out into, given the other global events as well. Remember, US futures are down almost 1.5%. It's a 2-day weekend. No idea, no guesses in terms of what is the fresh news flow that we'll get from West Asia as well. So, yeah, not such a great feeling this Friday afternoon overall.
No, not at all. And the other pocket is some of these, the beneficiaries, the few and far between of the oil price rise. So ONGC and Oil India have managed to still hold up in the green. I think they've come off a tad bit from the highs, but still, we've got a gain of about 1.5%. But on the flip side, the companies which get negatively impacted are far more. So one of them is the entire aviation complex. So Interglobe Aviation and SpiceJet are weak in trade. You've got paint companies like Kansai Nerolac, Indigo, Shalimar. Asian Paints will also come up for you on your screen. Asian Paints has been an underperformer on account of competitive reasons. But today, again, it's down another 0.5%. And then you've got oil marketing companies. I think we managed to connect with Sanjay. Sanjay, you were telling us.
Yeah, so on the fundamentals, I think the concentration in the aviation is very, very high. This is a valid risk in this business. But I think, these events happen. I mean, I really hope it doesn't happen very frequently, so I don't think that is a risk that we should be. I mean, there is a risk, but it happens. It's like a black swan event, But I think the checks and balances will significantly increase, for sure, going ahead, right at the procurement stage by the aviation companies and by the regulator also in terms of check and balances. That will definitely go up.
Hi, Sanjay. Good afternoon. Good to see you. When Sanjay, the lone metal stock that you've had and you've been building a position is Vedanta. The special situation will play out. And, with Hindustan Zinc at around 510 rupees, there's a temptation for both the government of India as well as the Vedanta group to take some money off the table. Because even if I take Hindustan Zinc at around 20,000 crores of EBITDA in the next 2 years, it's trading at 2,20,000 crores of market cap. So that's still the stock is trading at around 10 times. And if in case some money is taken off the table from Hindustan Zinc, it flows to Vedanta. What's your call on the stock at around 450 rupees?
Yeah, I mean, one part, as we've discussed also, the major issue of the global debt of the parent is significantly reduced. there's a clear roadmap of that $4.8 billion going to $3 billion and then eventually even further lower. That can be exactly, with the dividends and the royalty payments, they can repay the debt and interest payments. And we have seen that in the dollar cost borrowing of the global parent. And that, according to me, was the biggest overhang, which is now getting better and better every day. Now, again, once that is solved, then the valuation of HZL ownership by Vedanta and the core business, broadly, I think it's around 4.5-5 times EV/EBITDA, which is very, very reasonable. And also, Vedanta will also, the listed entity will also have its growth because of the aluminum expansion, the backward integration, and the coal mining coming up. So the entire company, in terms of the integration level in the aluminum space, will significantly get better in the next 2-3 years. And it's a sizable EBITDA of 45,000-50,000 crores. So we think that it is a good large cap holding to have it. It's a commodity, so we need to keep an eye on aluminum prices and zinc prices. But they are very, very strong on capital cost and operational cost. So that's why we have an overweight on Vedanta. And we think that this could give outsized returns in 2 to 3 years. And the dividend, at least 30-35 rupees dividend every year, is also very, very likely. So the dividend yield itself will be very good, and plus the capital appreciation.
Any other stocks that you like? We've spoken in the past of, Angel One, and I think some of the NBFCs like Shriram Finance, Canfin Homes. Any new ideas in this market?
Yeah, no, so I'll just tell you a positioning. We are on NBFC, we have big overweight. We have housing finance companies, 2 of them, India Shelter and Canfin. Bajaj Finance is a core holding we have. We are a little mild underweight on banks, but overall financials, we are overweight. We've increased our exposure to discretionary, while the near-term outlook for the auto segment is weak. But I think, as we move ahead, this year low growth is known. So as we next year move ahead, interest rate cuts, the pay commissions, we will see this benefit of tax. And we strongly believe that there will be revival in demand growth, but it will come with a lag. So all of it on a top-down looks better, but bottom-up we have to see in auto demand growth in the four-wheeler segment. So we have Mahindra, we have Maruti, we've added Tata Motors recently. And not only for the four-wheeler, but because of the combined piece, we think there are risks in the 1 or 2 quarters, but there is clear deep value in Tata Motors, and that's why we've added that. But otherwise, broadly, we are domestic overweight with telecom being overweight. Real estate, we have DLF. In EMS, we have Sirma. We have in consumer durable Polycab. So by and large, that has worked, and our global underweight has also worked by IT being underweight and oil and gas. It's not a global play, but domestic come global. There also we are underweight. And FMCG is a big underweight. We are zero on FMCG. So that's the way we are positioned.
Okay, all right. Good speaking with you. Thank you so much for joining in, and you have a good weekend. Look forward to catching up again soon. Well, Moody's upgrades JLR's rating to BA1 from BA2. That's good news coming in for Tata Motors. Let's see if there's any intraday reaction on the stock. Though, of course, overall the environment is just a risk-off environment. But let's get the intraday chart up. Yeah, we do have a small spike there on the rating upgrade coming in. Back to Nimesh then for the street chatter. Nimesh, tough Friday, Friday the 13th. But anyway, still blocks galore, and several of the buzzing news inputs that you shared with us, all of that is coming through. What's the latest you're picking up?
So from a market point of view, it's a decent recovery, I would say, from the intraday lows today. But again, the ongoing geopolitical risk, that's going to be a big concern, and that's a big story to track, at least in the near term, and that will have an impact on the equity markets as well. From a flow perspective, again, a mixed day of trade. I guess, again, it'll get biased because of the large block deal. So, at least that in the Jubilant blocks, I understand the domestic mutual funds were large participants. So, that's something which will have an impact on. Given the geopolitical risk, there is a bit of buying back in the defense stocks. So, at least I understand from an institutional point of view, both BEL and Hindustan Aeronautics were well bid by larger institutions today. So that's from a flow perspective. Technically, I think 24,450 is a level to watch on the downside. So I guess there is a strong support there. But it's going to be quite two-way kind of move is what I understand, largely because of the ongoing geopolitical risk.
Okay, what about stocks, Nimesh?
Well, a lot of individual names are buzzing in trade today. The first name is Nazara Tech, a big up move in that stock after there was a clean-out trade. So I understand a leading, influential investor who was holding a large chunk, he is completely sold out today. So it's a clean-out trade from a large institutional investor, large individual investor. So that's the first name. The second stock is Camlin Fine. We've seen a big move in that stock as well. If you look at the 1 month chart, it's been a big move. But now I understand there could be a large block deal in Camlin Fine very soon. Nearly 10% equity is likely to change hands. So that's something to track there. The third stock is Biocon. This is going to be interesting. There is a lot of indication that maybe Biocon is very close to now raising funds via QIP. They spoke about it in the Q4 earnings call as well. So that is something to track, a large fundraising in Biocon. And also there could be a further corporate development in Biocon. Largely everything to do with the reduction of debt. So that's something to track in Biocon there. And the last is R Systems. Again, a big move in that stock today. The volumes have also picked up. And even in R Systems, there's a very strong buzz of a large corporate development happening very soon. I was looking at the shareholding pattern. One large investor owns a big chunk. And there has been chatter in the past as well that he will probably sell out. So could be something in the works in R Systems as well in the very near term.
Thank you very much for that. We will slip into a break on that note. We'll come back and give you a few BTST calls, which you can take over the weekend.
You have stood up and stood by many of India's dreamers.
I became a magnet for entrepreneurs. So there's one man who will hold our hand and take us all the way.
So what is the art of deal making?
So whenever the deal maker wants to become too big, oh, I'm God, okay, you say this and you say that, kind of attitude, not literally, but I've seen that. What percentage of people you think die, Shireen, with regrets in their hearts?
A very large percentage.
So this risk of failure, fear of failure, is the one that makes people die with regrets.
What is holding us back?
Promote and protect the good. Prevent and punish the bad. We prefer to be slow rather than fast. That's how we are a chalta hai country and not a daudta hai country.
The lack of speed would be, if you were to IPO India today, that would be on the risk factor side in the DRHP, right?
I wouldn't IPO.
You wouldn't IPO?
But to IPO, I must have a new story.
You have a special place in your heart for Charlie Munger and Warren Buffett. What have you taken from them that continues to guide and shape how you think today?
Understanding of balance sheet, because balance sheet is accumulation of good and bad.
How do you find India positioned in this mix today?
We have a resilience, we have a stability, we have a wisdom of our own. But वो हम एक scene दिखाते हैं, फिर we have a long break. Stop that.
Interval थोड़ा लंबा हो गया.
बहुत लंबा हो जाता है.
Welcome back. Well, the markets are still sitting with a bit of a cut, but actually from the broader markets, there are select stocks that have moved up. I think steel strips is one stock we don't talk about very often. Volumes have picked up though, and that's moved to the high point of the day. So let's get in steel strips up for you on the screen. Mitesh Thakkar is back with us with a couple of fresh trading ideas. Mitesh, fill us in.
Yeah. Torrent Pharma. In fact, pharma is a sector which has done slightly better. So I'm taking Torrent Pharma as a PTSQ. Keep a stop below 32, 39, 32, 48. Look for a target of around 32.80 to begin with. And we can even look at high targets. And the other one is the STPT on Aarti Industries. It's trading around 461. Keep a stop at about 465.5. Look for a target of around 450 or thereabouts.
Let's just quickly turn our attention to the primary market. The Oswal Pumps IPO open for subscription. Vamakshi is here to understand the objectives of this offering, a little bit more about the company, how growth is shaping up.
Well, Rima, Oswal Pumps is a manufacturer of solar-powered and grid-connected pumps, electric motors, as well as solar modules. It is one of the few fully integrated turnkey solar pumping solutions provider, and in fact, it is one of the largest supplier of agri-solar pumps under the PM Kusum scheme. Now, like you said, the IPO has opened for subscription today. It closes on June 17. They're trying to raise 1,387 odd crores, which comprises of a fresh issue of 890 crores, and they will be using the proceeds from the fresh issue, number one, to pay off debt on the books of Oswal Pumps as well as one of its subsidiary, which is Oswal Solar, and they will also be utilizing it for capex. They will be utilizing around 363 crores, out of which nearly 90 crores will be invested in Oswal Pumps and the remaining in Oswal Solar. Now, as far as the company's financial performance is concerned, it has been one of the fastest growing amongst its peers. The revenue has seen a growth of almost 45% CAGR. The EBITDA margin too has improved substantially from 10.3% in FY22 to around 28.2% in the first 9 months of FY25, and the net profit too has seen a remarkable surge. Now, when we compare this company to some of its peers, the revenue base is definitely smaller as compared to some of the other peers, sort of justifying the kind of growth that we've seen in the company's revenue, but the margin profile of the company has been the highest among some of the key players like Kirloskar, Shakti Pumps, as well as KSB. As far as the asset turnover is concerned, for the company, it stood at 8.33 times in FY24, which is much higher as compared to some of its other peers, and that resultantly leads us to one of the highest ROCEs. The company has an ROCE of almost 81.8%, and the valuations too for the company stood at 21 times, which is much lower as compared to any of its competitors. But there are a few potential concerns that do emerge. Keep in mind that the company has very high dependence on the PM Kusum scheme for its revenue. Almost 87% of it was derived from the scheme in the first 9 months of the FY25. They also have a very elongated cash conversion cycles. 142 days is where it's at currently as compared to 91 days in FY24, and this is mainly on account of higher receivables. Given that it is a government scheme, payments could take some time, and the company did say that it was an election year, which is why the receivables were high. They also saw a spike in the short-term borrowings, and the cash flow from operations was also negative at 197 crores. So just a few concerns to highlight.
Got it. Thanks a lot for that, Vama. Well, let's hop across to Hemang Jani, who joins us on the show. Hemang, Vamakshi just explained to us about all the key details with regard to Oswal Pumps, but you're saying you rather look through it and you go with the one that's listed, Shakti Pumps. Tell us more.
Yeah, good afternoon, Nigel. So this is a company that has been doing pretty well over the last 2 years or so. And, one of the few companies with in-house manufacturing capacity across solar and electricity operated pumps. And we feel that the solar and the scheme which is run by the government, Kusum scheme, that would be the key driver of growth for this company. And the growth could be somewhere in the range of about 35 to 42% over the next 3 years. So with high ROE of about 29% and such a strong visibility, we like this player better because of its better brand, promoter credibility. So definitely Shakti Pump is something that we like at this point of time for a 30% kind of an upside potential.
Got it. Okay. All right, Hemang. Thanks a lot for that. We have got a few more questions for you for the time being. We'll slip into a short break, come back. We'll wind down the markets. We'll also continue with our market talk. Well, the final 5 minutes of trade coming up, but we've got a few more questions for Hemang Jani, who's with us on the show. Hemang, you told us about Shakti Pumps that you like. From the real estate pack, you're not going for a stock that's very, very well tracked. Uptown, I think you like that name. It's come back in style. Stock has given up a little bit from the top, but I think from the lows that we saw a couple of years ago, the stock has bounced considerably.
Still, what has happened is that real estate as a pack, we all know, has really bounced back very sharply, and within that, very few people have coverage on Uptown. And when we look at the number and that launch pipeline, we feel that there is a case for a significant growth over the next year, about 80 to 100%, given the projects which are underway. And the company could become debt-free over the next 12 to 16 months. So we think that with a very niche project pipeline, much better debt to equity, and much better pricing for some of the projects, the stock can do very well.
So Uptown is one such name. Hemang, what about capital market plays? I mean, as the market cooled off this week, we've seen quite a bit of the buzz come off names, whether it's MCX, whether it's BSE, and there were different news developments. I mean, there was this debate around electricity futures, whether MCX indeed benefits or not, because NSE is also launching them. But in general, how were you positioned on this space?
So I think overall, the team has done well, but now look at niche segments or pockets where you see much better growth with stability, because our sense is that some of the plays like BSE or some of the brokerage names like Angel One, I think the growth could be not as good as what it has been over the last 3 years because of the change in the regulations. And we think that the valuations for names like BSE stretch 75 times. So there will be some disappointment, at least in the near term. But some of the wealth companies, 361 or Nuvama, I think those are the pockets where you will continue to see a very stable 16, 18, 20% kind of a growth with diversified product offering and the new model in terms of pricing. So we like some of these wealth companies more than the pure brokerage firms or even for that matter, BSE. I think MCX is a relatively better place. The valuation is far more comfortable.
Okay. Got that. So that's on the capital market space. Today, of course, is one of those days that 361 Wealth Management is doing really well, 5% up on that stock. So that's as far as the gainers tally is concerned. Hemang, what's the overall advice? Because again, we are on a bit of unsteady or unsure territory with the market getting into a consolidation this week. So what would you say? I mean, are you on the wait and watch side, or is every dip still a buying opportunity?
I think geopolitical issues and few things here and there will keep on happening. I think looking at the overall macro picture, the liquidity flows, and the confidence people have on the earnings trajectory over the, let's say, next couple of years, things are looking far more better. So people are not too much worried. The only thing is which pocket, which sector to go in for. So I think banking as a sector could underperform, given that it has done so well. It's a bit of a crowded trade, and the incremental news flow may not be that great. But something like commodities, pharma, cement, these pockets where we could be, having an overweight position at this point compared to banks.
And where are you on defense? The best performing part of the market this year?
I think definitely, the headline is grabbed by geopolitical issues. So that is something that will always remain as one of the top themes. But I think we have to be far more selective, as we discussed earlier also, that it's as if that because there is so much of hype around this issue, states do necessarily well. But I think Bharat Electronics is something that we've been liking. I think consistently companies delivering 30-35% kind of a growth, good order book, reasonably good margins, but not across be comfortable getting into it.
All right, and BEL actually has been one of the winners on a day like today. Got that. Hemang, thanks very much. Good conversation. Have a good restful weekend and we'll connect again soon. Well, we're down to the last 1 minute of trade this week. So let's quickly recap what has been an all right day and actually not so bad considering the kind of news flow we woke up to. This is not bad at all. Remember, US futures are still down over 1% and yet the Indian market has managed to show quite a bit of recovery from the lows. So 0.6% lower on the Nifty. Mid-cap index even better. The cut there is just 0.25% right now. But the Bank Nifty has been weak, no doubt about that. As you just saw on the screen, the Bank Nifty is down a whole 1%. Okay, so let's recap the losers first. Adani Ports, ITC, State Bank of India, HDFC Bank, Kotak Mahindra Bank. These are the weak names. Reliance was also on the downside today, so joining in the bears camp, 1% lower. JSW Steel, Eternal, many of these stocks on the lower side. The green side of the Nifty, BEL definitely, it's been the best performing stock on the Nifty today. ONGC managing to rise thanks to the huge flare-up in crude oil prices. And you have some rush towards IT. TCS, Wipro, Tech Mahindra. These stocks have seen some green. The mid-caps, actually, I'll list out some interesting gainers today because the mid-cap market has been consolidating all week. Today, it actually got some money at lower levels. Hitachi Energy, 361 Wealth Management, Narayana Hrudayalaya, 4-5% up on these stocks. And some defense names like Zen Technologies doing well once again. By the way, some of the shipping stocks, look at Shipping Corporation of India, 11% higher. Just a sentiment move. I think the market perhaps getting overexcited, trying to interpret what this rise in crude oil prices could mean. Shipping Corporation of India, almost 11% up as we end the day. So overall, a week that has ended with a weak bias. Nifty losing about 1.25%. The mid-cap index losing about 1.5% this week. Well, that's where we take your leave. It's a wrap from the team that puts Closing Bell together. But don't go anywhere because we have Editors Roundtable coming up next with more perspective.